morning, everybody here this morning. Well, it is really a great pleasure for me to be here at Bangalore in this very special occasion. Now, everyone knows in this city, everyone knows Sharad and everyone knows his amazing achievements. But let me, Sharad, since the floor is with two of us and you've been party to creating quite a few things for the country, let me start with you. Now, you worked at Bell Labs, you've been an entrepreneur, you sold your company to Cisco, and got merged and something happened to those companies. You came back to India. So, having seen the Indian entrepreneurship the last 4 or 5 years emerging in the country, and the entrepreneurship experience the early 2000s in the US, really, how do you, what is the connection? Is there any insights?
Yeah, you know, I had this opportunity to work with AT&T, Lucent Bell Labs. How many of you know why Silicon Valley is called Silicon Valley? Right? I see some hands going up. In 1953, all patents on the transistor were owned by AT&T Bell Labs. And AT&T Bell Labs said that if any American entrepreneur wishes to commercialize this technology, they will not assert their patent rights. Now, if you're a Canadian or a Korean or a British, Indian entrepreneur, you couldn't do it, but an American entrepreneur could do it. So much so that one of the persons who decided to take the plunge amongst many is William Shockley, who won the Nobel Prize as an AT&T Bell Labs employee on the transistor, one of the 3 people who won the... So he went to his boss in the war effort. He used to work for somebody called Frederick Terman. Frederick Terman by now had become the head of engineering of a piddly little college in California, now called Stanford University. And, but it was not very famous at that time. So he went to him. He said, look, I'm thinking of doing it. I'm going to make so much of money that AT&T may change its mind of, you know, not asserting its patents right. Wow. What should I do? He said, beta, aap jitna west aa sakte ho, aa jao. You know, come as far west as possible. Because this is what, to escape this patent penchant of Thomas Edison, what Hollywood had done, moved west to LA, right? That's how you have Hollywood. So now Shockley was a charismatic guy. He could hire anybody, but he is also called one of the world's worst managers. So 84 teams left him, and they became startups in the valley. One of which was Fairchild, and a company that left Fairchild is Intel. So those 84 teams spawned off an ecosystem of making transistors in the valley, and therefore Silicon Valley is called Silicon Valley today.
Wow.
But the story is deeper than that. The story, the one many of us took from there, is that even in Silicon Valley, not only in the past, even today, Silicon Valley is the epicenter of value creation because there is this jugalbandi taking place between public goods or public infrastructure and private innovation.
Just let me stop you there.
Yeah.
So at that space, even when you look at Silicon Valley, the whole ecosystem of colleges, restaurants, bars, universities, how did that come about and what is the big insight from that?
So the simplest way is if there was no DARPA, there would be no Cisco today. If there was no Stanford research, there would be no Google today. If there was no, did anybody come by Uber today? And I see some hands, if there was no GPS, there would be no Uber today. So even Silicon Valley as we know it thrives in wealth creation because it actually has public research, public infrastructure, which is powering the private innovation that is taking place. Now this model was absent in India. So, you know, I see you in Shanti as entrepreneurs who ding the universe, right? And in the process happen to make money, right? I mean, so I think the group of us in 2009 said, could we create this public technology layer which would be our way of dinging the universe, but do it without making money so that it's an enabler for entrepreneurs to actually make money. And that's how this concept of what is now called digital public infrastructure or India Stack and those things came together.
So
And some of us then devoted ourselves to doing that, and it's been a journey of the last 12, 13, 15 years.
Yeah, I mean, that's frankly, all of us in this room very much appreciate this group of people who built such a digital public infrastructure, thought to the, even the iSPIRT that has put through so many things. But when you fast forward today, to today of the digital public good infrastructure available in India, it is one layer, an extremely important layer on the basis of which many fintechs and unicorns and soonicorns, everybody is coming up. But when you see the overall ecosystem beyond this layer that you put up, that is iSPIRT has put up, which is the city, the availability of roads, universities, colleges, bars, how far are we from Silicon Valley? And do we really have a real hope of going there? Do you think it's in the way we're working? Is that in the works, or Silicon Valley will keep running ahead?
See, we are where Silicon Valley was in early 80s. So I think we have a long way to go. I think we've come a long way, but there is some
So we are
distance.
Silicon Valley of 80s.
We are Silicon Valley of 80s. Not yet 95 when the hype started and then correction happened. I think we are in the phase of Silicon Valley where everybody understood that ecosystem building is very important, and everybody understood that that deal creation is very important. For example, I'll give you an example. In 1974, if you went to the Yellow Pages in California, there were only 7 designers. The design capital of Silicon Valley was actually, design capital of the world was Denmark. We still associate Denmark with great design. And a group of people decided that they want to change that. So in the same year, they created a design lab in Stanford University and a design lab in California School of Arts, which subsequently led to IDEO and many other things. The first product that was completely design-led was an HP 35 calculator. Anybody here heard of HP 35 calculator? You now have these cars which have retro editions. There is, by the way, a retro edition of a HP 35 calculator. Why is that so important is because HP, which used to be an engineering company, if they wanted a new feature, they would just slap it on and said, engineers will figure it out. Then inspired by this whole nascent design movement that was taking place, they decided to build a calculator with design first principles. They thought they'll send 800 calculators. It accounted for 40% of HP's profits for 8 years, right? That's why it's such an iconic calculator. When that happened, Steve Jobs was 17 years old. So if you read any biography of Steve Jobs, his desire to build a design-led company happened because of HP 35. So it took Silicon Valley 20 years or more to then become the epicenter of design for the world, not just digital design, but also physical design because of IDEO and others. So a lot of this ecosystem building used to be the norm in 70s, 80s, and 90s. And I think that spirit pervades Indian startup ecosystem now. And I think a lot of good things will come out from there as we go forward.
India has shown and seen and experienced that when they take something seriously and start building it, we make it happen. I mean, in the last 8 years, we know that India has built, I don't know how many of you know, the number of kilometers of highways built by India between 1947 to until 7 years ago was about 95,000 kilometers of highways. In the last 7 years, we built close to 50,000 kilometers, which means we built about 70% of what India has built in the entire lifetime built in the last 8 years. So India is capable of doing things. And now, similarly, what's happened on creating the public infrastructure. So if you are the Silicon Valley of 80s today, if the kind of effort we put to building highways, roads, bridges, infrastructure, logistics, if it comes to this ecosystem, what can give it that push to make it happen?
Since you brought up this issue of highways, see, the question that keeps getting asked is what is private infrastructure, what is public infrastructure? The US adopted, if you went, even today, you will appreciate this. If you go to Europe and you say, is train travel public infrastructure, private infrastructure, universal answer will be public infrastructure. If you went to the US, the answer was private infrastructure. US changed this in 1955 when they embraced the Interstate Highway Building Act, which at that time was the largest public works project in the world, which was saying something, because in 1955, Japan was still rebuilding, Germany was rebuilding, the Europe was rebuilding. So to be the largest public infrastructure project of the world was somewhat significant, right?
Yeah.
So the US changed its mind and said, maybe some part of transportation infrastructure is public infrastructure. I used to work for AT&T, but if you went back to 1982, I'd started my engineering that year, but British Telecom was formed that year. It was formed with this idea that telecom infrastructure, the operators are public infrastructure. But if you went to US, they saw AT&T, the largest operator, as private infrastructure. Do you can do this and say, what is the birthday of internet? Birthday of internet will show up as
1972.
No, 1983, right? Why? Because in 1982, the US courts, not the US government, ruled that AT&T is actually public infrastructure, right? And everything changed. And so therefore, DARPA, which had built the early version of internet called ARPANET, said, we are not there to run this thing. This is working very well, but we got to create a system that will do it on its own. And there were two camps. One camp said it should be a private infrastructure. The other camp said it should be public infrastructure. Why internet became public infrastructure? Because Windsurf and others in that camp of public infrastructure were able to invoke this ruling and say, if telecom infrastructure is public infrastructure, this should be. Now, what has happened in the last 10 years is that this debate has happened again. Should, for example, your cloud computing infrastructure be public infrastructure? The answer is no. Should the iPhone store or Android store should be public infrastructure? No, it should be private infrastructure. But in India, in 2013, a group of people here in Bangalore decided that our thinking is that flow of people, flow of money, flow of information should be mediated by a public infrastructure. Now, flow of people is Aadhaar, eKYC, e-sign. That is all public infrastructure. E-sign, for example, every player is a private party, but it is done on a protocol that is public in nature. So it is privately provisioned public infrastructure. UPI is privately provisioned public infrastructure. It's like a Bombay and Bangalore airport. I hope you will forgive me for comparing it with Chennai and Pune airport. The user fee is the same, but the airport quality is very different. So UPI is privately provisioned public infrastructure, and it's an innovation in the world. There's no other payment system like that.
Same for Open, same for ONDC.
Same is the case for AA, same is the case for OCEN, same is the case for ONDC. So now what India has done is to create this idea saying there should be minimal digital public infrastructure. This is an idea which has come from India that is traveling to the world. For example, my first time I visited Sweden, like many people in that telecom sector, was in 1992. Everybody was going to Sweden to see what is this new animal called GSM. And by 95, more than 50 countries had decided that they want this animal called GSM, including India. Some of you may remember we got GSM in late 96, early 97. And by end of that decade, more than 50 countries had embraced mobile computing. Today, here in Bangalore, we've hosted more than 50 countries who have signed some kind of a pledge saying we want digital public infrastructure in our country. Now, the strange thing is that while 50 countries get religion on this, it has not percolated so much in our own investment community for some reason, and that hopefully will change. So that ways, I think what together we have to tell this story, why that's going to be important as we go forward.
It's a very important point you're stumbling on too. So when we talk of digital public goods, whether it is Aadhaar, whether it is ONDC, OCEN, account aggregator, everything, now they're all coming together as a stack, and they're all feeding on each other. Individually, they can create value, but together they can create magic because of the multiplier effect and the compounder effect. Now, the implication of this in terms and the application of this in terms of startups sitting here or the investors in startups sitting here, whether in the form of mobility or agri-tech or social tech or banking, financial services, where do you see that take off? And can you give us some one or two specific examples where you saw it coming alive?
See, India Stack has a thought process. One of the persons who created this, some of you may be familiar with this Rajini slide. I know you are familiar with it, which is a street vendor. How to bring her into the formal system for intraday lending. We are not there yet. Intraday lending is that somebody like IDFC can give her a loan for a day and make money on that loan for a day. And not give it at 1% a day, which is what the money lender does, because that's 300% a year, but do it, let's say, at 30% a year, which is 1/10 of this. So you got to be able to fix the system so that cost structure comes down and she can be brought into the formal system. Of course, before you could do that, you needed to give her a bank account. 2014, we had only 17% bank account penetration, which is 86% today. You needed to get her in to be able to use digital payments, because that's going to give you a sense of how much business she's doing even as a street vendor. Do you agree UPI is helping make that happen? Right? You need to be able, for her to be able to own her data so that she can give it to multiple lenders and take the loan from the best lender. Account aggregators making that possible. If you're going to do that, can you bring multiple parties together? Fintechs and banks working together, along with some collection agent, some disbursement agent, all of them, so that they can interoperate with each other. That's what open networks are allowing you to do, open network for credit. All this has come together over time, but it's not fully there. The Rajini cannot still be served. Small businesses can be served. We are still a year or two away. So this thinking that we are talking about is important, because right from day one, it was meant to bring what is Bharat, what is India, to the middle India into the formal sector. So India Stack has two deficits that it was trying to tackle. One deficit is the innovation deficit. India as a country has decided that our innovation deficit is going to be fixed by startups. Do you agree? That is generally 100%. A belief. Correct. Whether it's defense or it's telecom or it's financial services, health. So for the startups to be highly innovative, they need the same public research, public infrastructure that Silicon Valley has had. That's what India started creating now. So that's the way India Stack or other digital public infrastructure is addressing that deficit, so that our startups can go and serve India too in a way that they were not able to do. Second deficit is the jobs deficit. In every country, the jobs are created by small businesses. And in India, small businesses are not yet served by credit adequately. And again, by being able to serve them with credit adequately, then you are in a position for those 8 million MSMEs on GST system that don't have a 1-year working capital limit to be able to get at least a 1 quarter, cash flow loan. And if they can get that, and they can get that on a consistent basis, there's a potential they may add 1 more employee. And if they add more employee, that's 8 million new jobs. That's nothing to laugh about. And if we can do that well, then it will help us plug the jobs deficit also as we go forward. So a lot of this focus is to take the startups from serving only 30 million Indian families, which is what most of our startup funding has done. Can you name a company that has served the second 100 million families? Very few startups are there. There's Zerodha, there is, there is Jio, of course. But most of the money, that startup money that has gone in serving the India one part that is there. So this is the new secular trend that is coming. And in that secular trend, where you will have startups and banks serving India to the 100 million families, India's 300 million families, the second 100 million families, that's where the opportunity is. That revolution is coming in front of us. And all of you as investors have an opportunity to invest in that revolution. And Vaidya, if I may flip this over now, because you've been looking at this, you are a practitioner, and not just now, you've been looking at this for 30 plus years. share with us, where is that opportunity in that sector? Why is financial services an untapped opportunity? And why is that opportunity not only in the market that is already served, because that also will grow, but a large opportunity is there in a market that is not yet well served. So share your thoughts about that as we go forward.
See, India frankly gave a very short shrift to the people in the lower income of the pyramid. It's a truth. It's a truth all over the world, but particularly so because I think in hindsight, India made this nationalization of all banks sometime in 1960s. Despite all credit to the work that has happened, has left a lot of vacuum in terms of in terms of staying ahead. So if you see a typical branch, until recently, you would find one branch manager or maybe teller crowded by 8 customers, all asking for some manual transaction of depositing cash, taking cash, whatever. So they had no time. And therefore, by definition, India credit never got disbursed. And just to tell you one information that so many of you know it's underserved, but I'll put some numbers to your knowledge, that the sum total of credit in the country, which is MSME credit, number 2 is retail credit, and agri credit in the country is today 55 lakh crores. Okay, retail credit alone, sorry. Retail credit alone is 55 lakh crores. Now, India's GDP is 270 lakh crores. For 55 lakh crores divided by 270 lakh crores is 18-19%. This number in most of the countries, as we know, 80, 90, 100%. So obviously, this segment has never got credit. It's as clear as that. Now, to tell the opportunity going forward, today this number of the 3 segments put together, what I told you, is $1 trillion. A reasonable estimate of 20 years from now, you'll be shocked with the number I'm going to tell you. If you grow this at just 15% for 5 years, then 14%, 13%, reasonable estimates of growth, it's going to take you to $15 trillion. 1 trillion, 15 trillion in 20 years. And 20 years is not very far. We're going to see it in a lifetime. So therefore, this is a massive moment coming in people's lives.
Absolutely. And, your own journey, it'll be good if you can share that. You started off, when you left ICICI, you acquired this company, Capital First. What was the loan book then? What was it when you decided to merge with IDFC? And what is it now in IDFC First? This itself is
See, this number I'll tell you. So, like I told you, this number is 1 trillion, the country today, $1 trillion, and it's going to $15 trillion. Like that, same story. In 2010, at least when this company started, loan book was 94 crores. At that time, dollar was some 45 rupees or something. So basically, we had about $15 million was the book size. Now, believe it or not, by 18, it was, say, about 30,000 crores. It was an NBFC platform. Now it's 1,30,000 crores. So what the numbers are putting are not just some, fiction. It's happening in our lives. And best part is, it has come not by financing the home loans and car loans to the rich. It has come by financing, the first set of financing we used to do, somebody came to buy a carpet. No way any bank can finance a carpet. So there's no problem, you can finance a carpet. They can't go to a bank in a queue and look for a loan for a carpet. Now, another set of use case we used to finance is that restaurants that you need for painting of a restaurant. Nobody would finance. Can you go to State Bank or any bank and say, give me money for painting a restaurant? Nobody give. So this kind of stuff and also finance. So this segment was just unserved. Let me tell you, I've been in the business for 13 years after Capital First. It is still unserved.
Yes. Because the market is so large.
And the segments, market so large, and people say it's risky. Now, with the new ecosystem that has come, with the amount of visibility of data, it's not risky, but we'll talk about that.
Absolutely. What are the other segments? So this is credit that is there, but there are, credit begets a whole new cycle of financial services in some way. Share a little bit about your thoughts about other pockets
So let me
that
talk
would
about-
be very interesting for the investors to invest in as they look
Yes,
at it.
but a lot of investors, here are lending tech investors. So let me tell you one data point since I picked up at breakfast with some of you, that in our bank, we have lent to 30 million 1 year ago, probably now close to about 40 million now. Close to about 35 to 40 million customers in this segment. And our NPA is still 1% net. Gross is still 2%. So for many of you who are family offices sitting here and looking to take investment in financial services, I would definitely say lending gives you the margin, lending gives you the profitability, lending gives you the opportunity, and lending gives you a long runway, the 1 trillion or 15 trillion I talked about. So be confident about that. That's my comment. Now, to your question about what are other things. Other thing is, I'll pick one. There are so many in the country, but let me pick one. Other one is wealth management. The real issue is that one of the real issues, I'd say just like loans, the issue is that people have needs, maybe if you see most banks, our bank or any other bank, they categorize customers like this, top tier customers, 5 crore and above, 30 lakh to 50 lakh is wealth customer, 50 lakh to this customer is affluent customer, below this is general customers can go to the branch, this customer can go here, this customer will give you RM, that customer will give you super RM. So basically in the current architecture has been running and everybody knows that here and that's how it works because you can't afford an RM to the person who's below the line. Now this logic is completely turning on its head because the need, if you come to the needs, for a poor person, say, who's running an auto rickshaw driver or maybe somebody who's maybe, at a salon, for that person, 20,000 is big wealth. You don't treat it as wealth because your income level is high. But in that person's eyes, 20,000 is wealth. For a person driving a taxi, 50,000 rupees wealth, but no wealth management facility available. So the ability to provide wealth management solutions, so-called wealth management as applicable to respective age group, in the lower segment, based on technology and insights, has dramatically changed.
There was a question that came up in that breakfast session about insurance. What is your take about insurance? At one level, you could say lending and insurance are complementary businesses. Both require prediction about the future. And, the fact that we have much more data and high provenance data coming online would probably help the insurance sector as it would help the credit sector. What's the difference? If you were in their shoes as an investor, what would be your guidance to them about insurance?
See, more than difference, let me tell you the similarity first. See, the thing is that, again, like in banking, bottom of the pyramid has greater need for insurance. See, every industry always starts with a need, okay? Need for insurance. Because again, rich people, if something happens to us, families run quite well because this was, but for again, same logic, below the line, they don't have any wealth to fall back on, the need for insurance is most, but cost to serve is highest. This is the issue. And this is the opportunity, this is the issue. Now, I've learned one thing that in many of these businesses, setting up a direct D2C business is very expensive. I don't know how many of you family officers are backing insurance companies setting up direct-to-consumer businesses. It's damn hard. And unless one big fellow pulls it off into a scale and zone of making profitable, God knows, very hard. The biggest opportunity for anybody setting up consumer businesses, in my opinion, is to do embedded financing. Don't try to create, I'd say that if you attach yourself to the flow of an activity that is automatically happening, it's efficient for both parties. And therefore, the economics play out much better.
One of the reasons...
For example, suppose an e-com company. An e-com company anyway have 400 million, 500 million customers coming there. Now, if you're partnering with the e-com company and say, by the way, I'm buying this wallet for say 20,000 rupees, give it me a loan, and then along with the process, one BNPL loan goes along the process, it's efficient. Similarly, if you give an insurance for that wallet, along with the process, it's efficient. But if you call the customer after 3 hours or after 3 days and say, by the way, you bought this take insurance, it's not efficient. So that's what I mean by saying embedded and attachment works?
So we'll have many sectors that will grow quite dramatically in the years to come. I think the financial sector is probably the largest because it underpins every other sector that you're talking about. But there's something special about this sector, and I think, I'm certainly privileged and fortunate to be sitting next to you, because to my mind, you bring two things together, which we need. You have, if I may use the word, the hustle, the quiet hustle to make things happen. Your numbers are like that. But you are also a person with high integrity. Now, in this regulated business that we are in, we need the entrepreneurs to have this high integrity without compromising the hustle. Now, I don't know how many of you know this. I've had the privilege of working with Vaidya and many other people in the financial industry. When you tell people or ask people which is the most powerful network in Bombay, it is the ICICI network. Who is the star of that network? It is Vaidya. His colleagues will often point to him, and if you talk to people, the enormous quiet respect that he has is legendary. In fact, Capital One FI, Deepak Parekh, tell that Deepak Parekh story if you don't mind, right? Because I think from there we'll build off and talk about the kind of entrepreneur that we need in this sector. I want you to expand on that a little bit more, but tell the Deepak Parekh story if you don't mind.
No, first of all, thank you for that. The thing is that I don't take such certificates to myself, because I think it's the way, if you do business that way, it also helps us in a massive way. I'll tell you, to your point about that example, in 2010 when I had left, like I said, I had personally taken a loan to buy a company. Now, first generation people taking a loan of that order of magnitude had borrowed like large amount, like 80 crore rupees in that window of 1 or 2 years. And, many entrepreneurs here will know that you can borrow and buy a company, but now what do you do with it? Okay? Now you start booking loans. When you start booking loans, you need capital, you need equity, and you need debt. So equity in 2010, 11, 12, 13, very hard to come by, very difficult. There were many issues at macroeconomy level. And debt was very hard to come by because our company was loss making. And it was funding real estate, and banks don't like financing real estate loans, right? So it was pretty hard. In the midst of all that, finally, I got one party to give a backing, saying that, okay, I'll give you 800 crores. So that party went to, Deepak Parekh and asked him that, what do you think of this guy? So I can say that he just
and
said
that
something
party
quite
eventually
amazing.
made a killing on that investment.
No, they were killing.
Yeah.
And Deepak said that if you have to fund one guy in the country, fund this guy. Then that was quite a lot. Then they went to Mr. Kamath, and he said something similar. The one thing I learned in life is that it's not the company was made. Nothing was made. Nothing was built. Nothing was built. But reputation and runs ahead. So, and you're cashing on the reputation ahead of actually delivery. So this is a very big thing in our lives.
So, I think Vaidya represents to me 3 parts of a triangle. One is the hustle. The second is to be able to step back and look at the macro picture. This is probably not the first time we are doing this, right? You remember those mint stuff that used to happen?
But a while ago, yeah.
Right?
10 years ago, yeah.
Well before this whole thing about India stack, Bharat market became mainstream, Vaidya has been on board with it because he understands these macro trends, I think, better than almost anybody else. The third is his unrelenting, decision to occupy the third part of the triangle, which is that build a high integrity business.
I appreciate that, Sharad.
And why this is important is because we are coming off certain cowboy behavior amongst fintechs in the BNPL sector. The cowboy behavior first happened with the Chinese players, RBI removed the Chinese players, and then some of our Indian entrepreneurs went and filled that Chinese vacuum instead of learning from that and saying this is not which is going to be tenable. And now we are paying the price for it because now our regulator is very circumspect about this. So the kind of entrepreneurs that we need are the people who have hustle, but know how to operate with high integrity.
See, I want to stop you there.
That kind of an entrepreneur, we have one sitting besides us. We just need to replicate Vaidya as we go forward.
No, Sharad, it's nice of you to say that, but I want to hold you there. Because the reason, because I just feel that it's not a role model or anything like that. It is basically, what I feel is that as entrepreneurs, reputation, you can kick off businesses with reputation. For example, when the company was starting up, Sharad, I used to hire people for that company. Somebody is coming from Standard Chartered Bank. Somebody is coming from some institutions and so on. Now, company is not there, nothing is there. Why would people join? Why? Why would you leave a Standard Chartered Bank and join? Why? If you have a reputation that, listen, whatever we speak will happen, or if I tell you, come in, don't worry, you join, I'll give you $1 million worth of options. Okay? Now, after the person joined, I used to give them $1.2 million only, not less. All verbal, but promises kept. So therefore, I'm trying to tell you that the benefit of a reputation running ahead is very, very useful. It can equally be bad also. If you have a great model but bad reputation, you're finished. But if you have a good reputation, it also always helps business. So I mean it in that sense. If you think about it, for example, even
explain to them why in a regulated business, this is critical. I mean, this is not optional. This is almost a requirement, right? Is that not true?
All the more important. See, for example, our own bank was, after merger, because of infrastructure loans, to your point, were posting losses for the first 4 or 5 quarters after the merger. And losses were big, not like small, like 1,000 crores, 1,500 crores, some 100 crores. But still, the general impression about IDFC First Bank in the market was good bank. Yeah, acha bank, a very good bank, a future. To your point, if our reputation of an institution is a good reputation, it can weather a storm. It can weather a storm. So, I don't know if you're aware or not, in 2020-21, in the peak of COVID, when COVID hit and world looked like collapsing and everything was going on, money usually flowed to ICICI Bank, HDFC Bank, Kotak Bank, not even, but basically ICICI, HDFC, even Kotak,
some of the public
sector banks, State Bank of India. And we were coming into COVID and we were not that well known a bank. But the reputation was good. In that year of COVID, our deposit base grew by 30,000 crores. Means public is pushing money into our bank during COVID. Why? So I do think that there is some benefit in this, and people give it a really good chance. And to your point, one real benefit is if you can paint the picture of the future. Just being a good institution doesn't help. For example, if you're posting a loss, even a startup posting a loss, to actually paint a picture for the future, which is credible and inspiring, is a very important part of the equation.
I think we are probably out of time. I can't see the clock, but I saw a hand gesture saying, do you think we have time to take a couple of questions?
Yeah, maybe a quick couple of questions.
Yes.
If you have any questions, please feel free to raise your hand. I'm going to come to you with the mic. Any questions? Yes, sir. Your name and you can pass on the mic, please. Thanks.
Hi. My name is Tarun. So most of the discussions on innovation and entrepreneurship here, kind of tend to drift towards financial services, right? But an important part of India is also technology, right? So my question was that not much innovation. I mean, India has been providing technology services for decades now, right? There's an ecosystem. The way it came up was not, it developed on its own, it emerged on its own. But all these India stack and digital infrastructure we're talking about has been kind of, to my mind, sponsored. There was a need, the government sponsored it, it came up, and that's how it developed. But not much technology, not much innovation is happening in the technology, even though there's an ecosystem there, huge ecosystem in India. So what do you think should be done to develop that innovation in the technology and other sectors in India?
You want to go first?
Yeah. First of all, your comment is right. Okay, let me just say that to you. In the sense that, if you see the Googles and the Facebooks and Meta and WhatsApp and all these guys, they've all built all these phenomenal technologies there. We're paying them dollars for trading between each other to them. And India needs to be able to develop that. And especially India needs to bring product-based solutions which can serve the world. Last night, Sharad was telling me on instance that, look, you can have any number of airline companies, but only 2 companies are making those aircrafts, and they're sitting somewhere there, right? And so on. So to develop a product ecosystem and somehow put your shoulder behind is going to be very important. And Sharad, you want to expand on that?
To build on what Vaidya is saying is that, see, there are 3 stories of India that is changing the confidence and belief. So first is, almost all these tech plays usually end up being circle of 5. They're like a space thing. There are 60 countries that have sent satellites to space, but only 5 countries can actually carry the satellites to space. India is one of them, right? There are only 5 countries that had a COVID vaccine, right? It wasn't Korea, it wasn't Japan, it was only 5 countries. Now, India stack is giving us confidence that if a ragtag bunch of no greed, no glory volunteers can pull this together, imagine what is possible if we really apply our mind to it. So I feel that we are going to see a big change in the years to come. Because I think this idea that we should be in that circle of 3, circle of 5 has taken root. Some of this is visible in defense sector, some of this will happen in semiconductors. It is very big story in telecom. I don't know whether you know.
But what is that one good tech product that India can make which the world can use?
It's very difficult to say. I believe, I would like to believe that given some of the changes that are going to happen in AI, there is something new that is coming out called DPI for AI, DEPA training, which will allow us to do AI models out of India that will be applicable to the world. Now, in which area? Health. Why health? Because the definition of keeping people or addressing disease is changing fundamentally. Earlier, it was about what do I go and kill, yeah, right? So therefore, you gave chemotherapy to somebody who had cancer. You give them cell therapy today. Now, this ability to understand the metabolic system that allows you to change it through cell therapy is originally an Indian Ayurvedic idea, which can be brought to life with computational biology and synthetic biology. And India is doing that. That's why we have rotavirus vaccine, 90% share. That's why COVID vaccine. There's a revolution that is quietly taking place, which we don't fully appreciate. All this requires what you call as in silico research, AI models, and those areas India may unlock its data sets faster than many other players would do in the world. So there are opportunities here. And I think, but to your point, India has to now embrace this pivot, which is to build a science and technology-based ecosystem of startups and other companies, which will actually propel us, on this journey that we are on right now.